Welcome back to Smart Money. We're talking about the do's and don'ts while investing, or rather while buying life insurance. We have Dheeraj, the Chief Distribution Officer at Bajaj Allianz Life with us. Before the break, we were talking about ULIPs and the pros and cons of, investing in ULIPs. But I also want to talk about PAR plans, participating plans, right? How does it benefit a policyholder?
As the name suggests, participating plans are the non-linked traditional plans. Participating means that you get the guaranteed benefits which are already mentioned in the policy features. You also get to participate in the profits of the organization in form of bonuses and dividends which get announced from time to time. Typically, insurance companies announce these bonuses at an annual rate. So annually, the bonuses get announced, and that's what is called participating plan.
Okay. The big question I always ask myself is, how do I determine how much life insurance coverage I would need at different, age points?
So it depends on various factors, Sonia. First is, at what age are you buying? What are your financial responsibilities and liabilities that you want to cover? What is your lifestyle? That is a big determinant on what kind of cover do you need. What are the what are the health conditions that you presently have? So these are some of the factors, which really help you determine what is the kind of cover that you need. There are rules of thumbs which every financial planner will have. Typically, they say about 20 times the multiple of your annual income is sufficient. But I would recommend that look at your financial goals and financial responsibilities that you have, the kind of lifestyle that you have, and assume that if you're buying a plain life insurance product and tomorrow if you're not there, would your family be able to meet their financial goals and sustain their lifestyle with the amount of cover that you're taking? And always remember that earlier the better. And as your financial goals and responsibilities go up, keep enhancing your cover.
Okay. I'll come back to that in a bit. But before that, a lot of young people now deal with lifestyle diseases, right? So whether it's pre-diabetes or even diabetics, right? The age has become younger. There's heart disease as well that people are battling with. Earlier, it used to be common at about this age group of 40 to 50. Now it's become 30 to 40. In such a situation, how can I ensure that being young, I get the right insurance coverage having such lifestyle diseases?
So again, first, overemphasizing, buy it young. At the age when you do not have the health conditions or the lifestyle disorders, it's better to buy life cover early. Second thing is, there are products which today have features which help you buy life insurance even when you are carrying some pre-existing disorders like diabetes. We created our industry's first diabetic term plan about 6 months back, where if there is a person who is diabetic and has HbA1c, that's the uniform barometer used for checking how well you are managing your condition. If your HbA1c level is less than 8, even if you're a diabetic, you can buy this term plan and secure your future life goals. Important thing is, declare your health condition at the time of buying, so that in case of a claim stage appearing, there is no disappointment for the family because of concealing the health conditions.
Okay. And any other products, any other such products that you would have? I'm just trying to understand, apart from diabetes as well, there are so many other preconditions that people deal with at this age, right? How does one structure it? Do you factor it into your current policy? Do you take a separate policy for that? How does it work?
See, conditions like diabetes, you can factor into the current policy itself. For covering your other conditions which may or, which possibly can impact all of us, there are riders, there are health riders, there are critical illness riders which you can buy, there are riders around cancer which you can add to your policies. They enhance your cover. They enhance your cover so that you are able to meet your financial liabilities in case of any of these health conditions derail your financial goals.
Okay. What are the red flags? I want to understand that. There are a lot of loopholes. I do know that while buying insurance, there's a lot of mis-selling that happens of products as well. From someone like you who's been in the industry for so long, you want to just, educate our viewers on what are the red flags or loopholes that you need to be aware of before buying insurance.
Try to understand what you're getting into. It's as simple as that. What do I mean by that? Whoever is proposing that solution to you, whether it is your bank staff member or it is your advisor or you're trying to buy it on your own, because there are a lot of people who buy insurance on their own these days. Try to understand the terms and conditions. Try to be very, very clear about what financial goals you're buying it for. Please remember that these are systematic, long-term investments. During COVID, we saw a lot of such people who had bought their insurance plan but did not pay their renewal premium, and unfortunately the claims could not be honored. There are people who buy insurance plan and they lapse the policies, they end up losing the money, and their families end up losing hope because they don't get the claims. If you don't understand anything, just get your doubts clarified. Make sure that you are filling up the form on your own. Your signatures are matching if you're filling up the physical forms. The KYC documents that you're giving are authentic, reliable, and you've gone through all these things. These are some of the basic red flags that you have in all the products. I just re-emphasize only on one point, that these are long-term investments. If you're buying a regular premium paying plan, ULIPs, I told you, are locked in for 5 years. Likewise, the traditional savings policies like participating plans that we spoke about, if you have bought it where you are supposed to pay your premium for 10 years, make sure that you don't deprioritize that premium payment, because it is to cater to your own financial goals in the days to come. And term plan is for your family's safety, so pay premium regularly.
Okay, all right. We'll leave it at that. Thanks a lot for joining us and, taking us through this entire process. Picking life insurance, I believe, is one of the cornerstones of, building your wealth and creating your portfolio through the course of your life. So thank you for educating our viewers. Any final thoughts before we...
Thank you so much, Sonia. And once again, thank you so much for having me on the show. And I would again urge everyone, please buy your life insurance carefully and make sure that you use them for meeting your financial goals.
All right. Thanks a lot for joining in. And to all of you viewers, thanks for tuning in. Have a great weekend. And if you have any feedback, you can write into us, you can mail us, and, write into us on our social media platforms as well. We'll be sure to take up all of your queries. Until we meet again, have a great weekend.